Just a couple of days ago, I posted a chat in my community section. What trade would you enter? When I look at the results, most of you guys will enter into short position. But let's analyze the chart first before entering any trade. For those of you who don't know, this is a Euro-Canadian dollar 15-minute time frame. Now, in this video, we will go through 3 things that interest us and that I strongly recommend you follow while trading. The first thing is the market structure, then the resistance and support zones or demand and supply zones. Third is just a trend line. These are the 3 things. Or simply put, if we have a bullish structure, the resist is far up and the price moves above the trend line, it is highly likely that it will continue in the same direction, namely upwards. As people say, if a bird moves like a duck, eats like a duck, screams like a duck, looks like a duck, then it's most likely a duck. It's the same thing. Without further explanation, let's get into it. So the first thing I want to do is to determine the market structure, determining the trend. So each new impulse upwards break the previous high. Right here, higher low, higher high, higher low, higher high, higher low, and higher high. This means that we are in a bullish trend. So far, I think that you all have to agree with me. Now, the second thing I do is to switch to a larger time frame and determine my zone of support and resistance, supply and demand, or in other words, my order books. I trade on 1, 15, and 4-hour time frame. So I enter on 15-minute time frame with a target of 4-hour time frame. I switch to 4-hour time frame. And as you can see guys here, for Euro-Canadian dollar 4-hour time frame, the price are making consistently lower lows. So this impulse from here to here is impulse on 4-hour time frame. This here is our break of structure. When we have a break of structure, then we should have a retest, and this whole movement is our retest. So we're looking for a bearish order book to sell. You know that the bearish order book is the last bullish candle before a strong move to the downside, and this candle is right here. So we just mark this zone. Okay, if you don't know what order books are, just click this video that comes right here. Okay, on 4-hour time frame, the price is likely to touch this bearish order book and push away from it, reject from it, and continues its downtrend movement. But we are back on 15-minute time frame. I will trade on the trend, so at 15 minutes I have to watch for a change of character, or with other words, we have to break this last higher low. Well, now it remains to draw my trend line. Many people underestimate the trend lines and many people then lose their money. You need to understand that the trend line is not drawn to buy when the price touches it, but to have an idea of where the trend is. It doesn't really play any big role except as a third confirmation of a position. A trend line is valid when there are at least 3 points of support. If you have only 2 points, this is not a trend line. This is my trend line. First of all, we have this first touch. This is our initial touch. The second touch is right here, thus is a second touch. And the third touch is our confirmation touch. For example, from this wall, so this is our initial touch, second touch right here, and here is our third touch. But this is not a trend line because, as you can see, we have a first touch right here, the second touch, but the third touch is too far away from the second touch. So the third touch is too far away from this touch, and this isn't a valid trend line. And as you can see, with the further price development, price breaks below this trend line, but of course, new high fall. And so to summarize here, first of all, we are in a bullish trend that touches a bear order block on 4-hour time frame, and we are above this trend line. I personally, when I see that a 15-minute and 1-minute, I'm bullish, but I'm very close to bearish order block on 4-hour time frame, I close the long positions and wait to reverse the trend on 15-minute time frame so that I can enter the bigger trend, because always, but always the trend on a larger time frame has an advantage and takes it. Just the chance for the price to continue the trend on 4-hour is much greater, it's much bigger. Let's will see where our short entry should be. And again we come to this picture of the community section. Everything looks very good. The price first goes into a bearish order block on a 4-hour time frame. Then after we touch this bearish order block on 4-hour time frame, we just reject from it and we broke the last higher low. So we have a change of character. Now, I want now to look at the market structure of the last movement. One more time. We have a low, follows a higher high, higher low, higher high, higher low, higher high. But as you can see, this correction from here to here is too large. So, and as you can see, down, up, down, up, down, down, up. This is a range who lasted a long time. Remember that we always have such a long movement sideways. This is either distribution or accumulation. Fact that we touch a bearish order block on 4-hour time frame, the chance of buying this distribution is quite large. But what is the problem here? The problem here is when we have such a range, the price always takes both sides of it. At the top of the range, there are limit orders or stops, and the bottom of the range, the wall of the range, there are limit orders or stops. Again, this all is liquidity. This all is liquidity. If you don't know what liquidity is, just type right here, less than 5 minutes. I personally mark it with dollars because the price always tries to take such dollars. Actually, when I see such a movement, such sideways consolidation, I move my change of character from this wall to the previous higher wall, which is exactly right here. And as long as we are holding this level, we shouldn't looking for short, because it is highly likely that the price will take the liquidity of the range on the both sides and then continue its upward movement. Until we pass this bottom, we are bullish on 15-minute time frame. So let's see those who went short. So the price goes down, touch this area, liquidity area, grab the liquidity and continues its upward movement. And as you can see, we have made a new higher high. If you saw this false breakthrough to the downside and enter here into short position, putting your stop loss above the previous swing high, and of course risk to reward ratio 1 to 2 minimum, your stop is knocked out. The feeling is not pleasant. Again, only when this bottom is broken, we have a change of character from bullish to bearish. Then we have to wait for a test and then enter the trend. That's what happens right here. The price goes below the previous higher low, close below it. We have a valid change of character. Now we should enter into short position. We break through the bullish trend line, which is our third confirmation. Once we have this free confirmation, we can safely enter into short position at this reversal bear trend bar. So we enter at the close of this reversal trend bar, stop above it, so here, stop above it, and risk to reward ratio minimum 1 to 2 risk to reward ratio. So, okay, let's see how the trade plays out. And 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 candles and 23 pips profit. This is the right way to trade change of card. Okay guys, this was for today clip how to find another confirmation of trading to the trend. Here, don't forget to subscribe or Elite Trading Zone will hit your stop loss. Till the next time.